Hello traders, Gary Wagner here. It is 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, 15th day of March, 2023, and this is the daily report for gold and silver. Today, there was a global rush into safe haven assets. It began in Europe, then moved across the pond into New York as news surfaced of a new bank failure in Europe, Credit Suisse. A wild day in the commodity markets with the dollar higher as well as gold, but gold had a wild swing in terms of price range. It opened at $1,923. It traded to a low of $1,889.50 and a high of $1,942.50. As of 5 o'clock p.m. EST, gold futures basis, the most active April contract, is up $12 at $1,922.90, which brings us to the dollar. And the dollar had substantial gains today, a gain of 1.16%, taking the dollar index to 104.41. Lastly, silver continues its price decline, dropping by 12.5 cents, with the most active March contract currently fixed at $21.92.5. The Central Bank of Switzerland announced steps it might have to take to shore up Credit Suisse. Another banking crisis has emerged, this time overseas, resulting into a flight of safe haven assets. The assets include gold, the dollar, as well as U.S. Treasuries, all of those trading higher today. And in terms of gold, some wild swings from high to low, as you can see on this daily candlestick, in which gold had a $52 price range from high to low. Of course, we went long at 1,828. Recently, we moved our stop up to $1,898.60. That's this green line here, which clearly was executed today, taking us out of our current long position with a nice profit. During an interview, a legendary stock trader of the 50s, Herbert Hoyle, was asked why he was able to make a profit when many lost on a similar trade. His answer was simple and direct. It's because I always get out too soon. I think that applies to today. The event that took gold higher and created these wild swings wasn't a black swan event in that this had been building for years with Credit Suisse. It was the announcement by the Central Bank of Switzerland that made it a black swan or unexpected event. Nonetheless, we did enter our last trade at $1,828. We got out at $1,898 for a profit of $70.60 per ounce, or $7,060 per COMEX contract. We're currently right at that price point. This represents trading overseas. I am looking at resistance and support levels as follows. Currently, resistance has to be based on today's high, and I'm looking at support coming in at 1912 and then at 1895 to 1900, that key psychological level. We want to see if this concern grows, moving gold back up again. In that case, we might buy the breakout. I would much rather buy a dip. And as I talked about yesterday, the optimum thing that would occur is that if this market softened a little bit and came and filled the gap that was created between the high on Friday and the open on Monday, and re-enter the trade at approximately 1,870 and change. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.